Hi there, welcome back to Buy Now, Sell Now. Time now to start addressing all viewer queries, and to do that we have Kunal who's joining us in the studio, and we also have Rupak Dey, the Senior Technical Analyst at LKP Securities. It's turning out to be a techie special show today. And before we start addressing your queries, viewers, just a word of caution. Please be specific in your stock query. Mention the stock name that you have a query about, your exact query about the stock, the buy price at which you have the stock, the time period that you've been holding the stock for. So mention all of these details and we'll be able to help address your query better. And also for viewers who want a stock, who want a view on a stock that they potentially want to hold in the future, please mention the stock, and more importantly, please mention the time horizon that you are looking to hold the stock for. On that note, let's get started with all viewer queries on this edition of Buy Now, Sell Now. Kunal, I'm going to come to you first because we have a viewer who has been very enlightened by the Pathshala segment. They have a follow-up question. So before we start addressing stock specific queries, let's answer this query. We have a Narayan who's writing to us from Bangalore. He's saying it's nice to hear about the Pathshala segment. His question is, which chart should ideally be considered for trend, multiple, bottom or reversal pattern? He means, should we be looking at the 15-minute, hourly or daily candlestick chart? It's a follow-up to the Pathshala segment. Kindly help him understand this chart better.
So yeah, I think to put it very simply, you should look at the longer the time frame for stocks when they form bottom, the more impactful the charts are. For example, I think if you look at say a multiple bottom formation on the monthly charts, that could have ripple effect into stock prices going into series of years of long-term uptrend. Then when you look at it on a short-term time frame, say on the weekly charts, then the effect of that could probably last for maybe another 3 to 6 months. Or say around 15 to 20 candles, 15 to 20 weeks as such. When you try and look at this on the daily charts, then we look at this as an impact for the next 1 to 3 months potentially on stock prices. So the higher you go in terms of time frame, and if you spot those kind of charts, the greater the impact is on the stock prices, especially on the long-term basis.
Right. This one's come from Sukumar. He's writing to us from Chennai. He has about 1,000 shares of JM Financial at 107 rupees per share. He wants to know whether he should come to hold on to it or look to average. A very good morning to you, Kunal. Once again, good morning to you as well, Rupak. And Rupak, I'm coming to you for this query. JM Financial, 107 is the buy price, 1,000 shares.
So after correcting significantly from its high of around 170, the stock has corrected down to around 80. So now the stock has shown the initial signs of significant recovery. Immediately the stock has moved above its important moving average on the daily time frame, and it is likely to continue its upward journey in the short term. So I think 120 could be the next target for the short to medium term, I think. And on the lower end, support is there at 88 rupees. Till the time it is sustaining above 88 rupees, there would be a chance for a significant up move in the short term.
Thanks for that take. That's the take coming in on JM Financial. Kunal, coming to you. Our viewer, Ms. Devi, is writing to us from Tamil Nadu, and she's holding 25 shares of Birlasoft at a buy price of 580 rupees per share. So the stock in question is Birlasoft. She's asking if now is the right time to average. Birlasoft at 406 thereabouts. Her buy price is 580 rupees per share, which means she's sitting on some loss on her holding. What's the view on the charts going ahead?
So over the last couple of months, I have been indicating that the stock would probably go into a corrective phase. Now I think closer to that 400 mark where the stock has settled into, I think it's a good price where you should look to start entering into the stock. And specifically when I look at this on the monthly time frame, the stock has come back towards a major trendline support. Something which started off in 2019-20 for Birlasoft, moved towards a point when the stock was sub 300 in 2023-24. So I think it's coming back to those kind of strong support points on the long-term charts. Since my assumption is that you're a long-term investor, I think at current levels, if you try and average, try and bring your cost price, say closer to 450, 475 mark, so you can average the position size accordingly.
All right, so that's the take coming in on the counter. Let me take this next query then, and this one is coming in from Venkat Ramani. Wants to know about Jio Financial, 90 shares at a price of 331 rupees per share. Wants to know whether to average or hold. The period is about 12 to 15 months. Rupak, what's your take on Jio Financial?
Yeah, it can be averaged out at the current level, keeping a stop loss below 218. So I think the sentiment might remain positive in the short to medium term for Jio Finance till the time it is sustaining above 218. And on the higher end, we have a resistance around 240. Above 240, the stock might move towards 262 kind of levels.
Okay, that's the take on Jio Financial. Kunal, our viewer, Mr. Nikhil Sharma, is writing to us from Mumbai. He's an intraday trader and wants to understand that he had sold 50 shares of Hindustan Zinc at a price of 438 thereabouts. He wants to know that what price would be the right time to repurchase the stock or any other dividend stock suggestion you have. So he used to hold Hindustan Zinc. He sold it for the time being but wants to make a fresh re-entry. Would now be an attractive price level to do so?
Yeah, it could be a good price where you can look to start entering into Hindustan Zinc yet again. I think it's come back towards 445 thereabouts on the charts. The volumes in the last 2 days has been on the higher side. It was just that the stock I think went up to 480 on an intraday basis where the indicators were overbought. So it's just trying to cool off in terms of the overbought indicators or just correct itself. So I think maybe over the next 1 or 2 days you might see the stock actually settling into this band around the 448 445 mark, and you could be looking at a point where the stock may come back towards 480 levels. So it could be a good time where you can look to start entering.
Right. This one is from Anand writing to us from Bangalore. Kunal, let me come back to you again for this one. He has about 500 shares of Reliance at an average price of 1,150 rupees per share. He's saying that there is no action for almost 2 years. Should he sell or reinvest somewhere else? Also, he has Exide Industries in his portfolio, 1,000 shares at an average price of 200 rupees per share. So he wants to know whether he should book profits or exit.
No, I think you should hold on to both of these names. So there comes a point where large cap stocks or they tend to underperform for a period of time. But then once the risk reward starts to look attractive, that's a very good zone where you should look to build these stocks back again from a long term play. I think both Reliance Industries and from the mid cap arena Exide, both of them they've come back into that kind of a zone. I think at current levels of 1250 thereabouts for Reliance Industries and say I think 350 360 thereabouts for Exide, they have very good territories where you can look to buy or average.
Okay, so that's the view on Reliance and Exide both. Rupak, coming to you, our next query is coming from our viewer, Mr. R.K. Deshpande, who's writing to us from Pune. He's asking, it's an interesting query because he's asking on the charts amongst REC and PFC. If you have to pick one between the two, which would be the better pick for a period of 6 to 9 months? Now, every time we address one stock, these stocks are usually addressed in a pair. REC and PFC always go hand in hand in terms of market moves as well. But if you have to pick one between both of them, which one looks more attractive on the charts from a 6 to 9 month time frame?
Hand in hand, but if I look at the daily chart, the chart of REC is looking better than PFC right now. So on the daily chart, REC has given a inverted head and shoulder pattern, and the stock looks very attractive for a significant up move. I think in the short to medium term, REC is likely to outperform PFC. On the higher end, the stock might move towards 470. And if it sustains above 470, then further rally towards 510 can be seen in the stock. And right now, we can place a stop loss below 410. Below 410, the REC might fall into consolidation.
All right, so that's the take coming in on PFC and REC. Whenever you, like Snehi said, that both of these counters actually go hand in hand. Whenever we've had queries for both of them together. Let me take this one coming in from Satya. Wants to know about HCC, Kunal. He wants to switch from the next resistance level. What's your recommendation on that? He's written, does my favorite Kunal have any recommendations?
So I would suggest to hold on to HCC at current levels because what we are seeing today is a very strong jump in volumes for stock, and by that the stock has also moved up higher by a margin of I think 10 to 12%. That's a very strong indication that a major bottom could be at place for HCC, and even if you look at a cyclical upside, say for the next 3 months or so, we could be looking at the stock hitting levels of even 35 to 40, provided the market also maintains the stable uptrend going forward. So I would believe that today's chart pattern, candlestick pattern is very interesting. Could probably look out for targets in range of 35 to 38. So which means you can look to start buying at current levels also.
Buy at current levels is the call coming from Kunal for HCC. Let's get in the next query. And Rupak, this query is coming in from our viewer Narayana Reddy. He's writing, in fact, he's asking if now is a good time to enter into Bajaj Auto and Trent. What's your view on the charts for both of these stocks?
So both of these stocks are looking to give a significant rally in the short term. Like both of these stocks have moved from their recent lows, and we can see the base formation for both of these stocks on the daily chart. So short term perspective, I think both these stocks might move towards for Bajaj Auto, the stock might move towards 9,000, 8,500 is the immediate resistance. Then 9,000 is the second resistance. On the lower end for Bajaj Auto, we have a support around 76.50. So 70 till the time it is sustaining above 76.50, I think sentiment might remain positive for Bajaj Auto. But if we compare the chart of Bajaj Auto and Trent is looking better than Bajaj Auto. I think Trent is forming a consolidation on the daily chart. Now, once the consolidation ends, the stock might move towards 6,000 in the short term. And a support is there for Trent that is placed at 5,000. Below 5,000, it might lose its steam.
This next one is coming for you, Kunal. This one is coming in from Sanjeev Chandra Sinha. He's writing to us from Lucknow. He has Nestle at an average price of around 2,538 rupees per share. He's saying he wants to average his purchase. He's a long-term investor. One, he wants to know, is it a right decision for him to do that? If it is right, then at what price should he look to purchase? And what's the target for 2 years?
Yeah, so one word answer, I think you can look to buy. My sense is many of these FMCG stocks, I think they are likely to form a near to medium term bottom for themselves. The pace of rally for these stocks could be a bit slow, so you'll have to be a lot more patient over here, because my belief is that when stocks like FMCG or when sectors like FMCG, when they form a bottom, they take a lot of time. There is a lot of buying selling process which happens, consolidation for stock prices. But then eventually you see the stocks moving up higher into a fierce uptrend. So risk reward wise, price support wise, I think Nestle, and if I can probably club maybe another few FMCG names like HUL, Britannia, I think these stocks are looking very attractive.
Okay, so Nestle along with HUL and Britannia from the FMCG pack looking good to Kunal. Kunal, once again coming to you, this query is for you from our viewer, Mr. Mahesh, who's a senior citizen writing to us from Delhi. He is holding 250 shares of Delhivery and currently at a short-term loss of 44%. Kindly advise if he should hold or exit. If he should exit, do you think he should go and reinvest all this money in Concor, because he realizes that Concor is also 44% lower from its 52-week high? So hold or exit Delhivery, and if exit, is Concor an attractive bet right now?
So it's a tough one, frankly, Sneh, to answer, because even Delhivery at current levels, I would believe that the stock looks fairly attractive. Concor, of course, something which I've been tracking of late, especially from the 600, 620 kind of a major support point. The stock has started to look very attractive on the long-term charts, and there is this cyclical nature for Concor that in the first 3 months of a calendar year, the stock forms a major bottom for itself, and we've seen this phenomena over the last 4 years for Concor. So that's an interesting chart. I would believe that the stock should head towards at least 800 to 850 potentially in the next 12 to 15 months. So, but I think it's better that you hold on to Delhivery, as well as if you have additional capital, then only I think look to buy Concor.
Alright, so that's the take coming in on Concor. On that note, we'll slip to a break on this edition of Buy Now Sell Now. When we come back, we will be continuing taking your queries along with Snehi and Ankita, so don't go anywhere.
Hi there, welcome back to Buy Now Sell Now. Markets are holding up pretty well with just slightly off the day's highest point. Not much to worry about. It's a 0.7% uptick coming in. We're holding firmly at the 23,350 level in today's trading session. Let's keep it going with the queries then. And Rupak, coming to you, our next query is coming in from Mr. Venkatesh, who's writing to us from Hyderabad. The stock in question is Castrol. He's asking if he can buy Castrol at a current price with a 2 years time frame. What's the view, and how is Castrol looking like on the charts right now?
So I think it will be prudent to buy Castrol above 222, above 222. So I think above 222, the stock might move into momentum, and the upside move will be easier for the stock. And above 222, the stock might move towards 250 once again. And in that case, above 222, if the stock moves above 222, the one should keep a stop loss about 215 and wait for the target of 250 to achieve.
All right, moving on then. After Castrol, Kunal, this query is for you. Now, this person, they have not given their name, but they're holding 1,000 shares of NMDC, and they would switch to ITC Hotels or REC. They want to pick between ITC Hotels and REC. Does that make sense in the midterm, or what advice would you give if not between these two? Should she be holding? This is Tina writing from Tina, who's writing, and she wants to know whether she should pick ITC Hotels or REC, or should she stick to NMDC?
Tough one. So I think I would look at REC as a better bet at current levels, frankly, because I would believe that many of the power financiers, they have underperformed, so they would start to look attractive. It's about adjusting the beta of your portfolio. If I'm if I can sense it aptly, because ITC is a stock which is typically low beta, so generally the stock moves up well when you see a cyclical uptrend coming back into the indices, as well as sentimental moves on the upside. But I think the likes of REC, NMDC, etc., these stocks, they generally tend to move up higher when there is an initial wave of short covering, as well as a strong risk reward analysis over here. So I would believe REC as well as NMDC could be good bets. ITC is a very strong bet, but as I said, that it requires you to hold on to the stock for at least a period of 1 to 2 years minimum. That's where I would believe that bigger trends would start to unfold pretty much on the positive side.
Okay, so that's the take on both REC and ITC Hotels. Coming back to you, Rupak, our viewer Mr. Jaykrishnan is writing to us from Kerala. The stock in question is Polycab. He's not mentioned the number of shares he holds, but his buy price is 6,100 rupees per share. Polycab is significantly lower than that price. Of course, yesterday we've heard the foray into this by the Adani Group, the cables and wires segment. Last week we had Ultratech Cement who had announced something like that. So fundamentally, wires and cables has been quite affected. But on the charts, what does Polycab look like to you right now? Because he wanted to hold this for the medium term, but now he is not sure if he should go ahead with this. What's your strategy, and what would be your advice to him?
So Polycab is looking a sell on rise candidate. To me, I think till the time it is sustaining below 52, 60, the stock might remain into sell on rise kind of stock. And below, if somebody is holding the stock, he can hold the stock with a stop loss of 4,900. Below 4,900, I expect further fall in the stock, and that fall might take the stock towards 4,500 and lower. And once the stock moves beyond 50 to 60 kind of level, then the stock might move into buying zone, and then it can be bought again. So keeping stop loss at 4,900 would be better idea.
All right, moving on from Polycab, coming to you, Kunal, for this one. Now, Kunal, this one's for you. This person is writing from Tamil Nadu. This is Achal writing from Tamil Nadu. Wants to know, he's holding RVNL and he holds 942 shares and he's bought it at a price of 503 rupees. He wants to know when will it reach 500 or 600 mark, because we know it has corrected fair bit since then. In fact, all these PSU stocks are down almost 20-30 odd percent. RVNL is down 30% in the last 6 months. So he wants to know when will it scale back to the levels that he has bought it at, which is very high. He's bought it at 503.
Yeah, in fact, Ankita, over the last 7-8 months, the stock has fallen more than 50%. 640 was the high for RVNL. It came down to 310. But I think what's very important is that you should try and take advantage of these 40-50% corrections, because these are odd phases of corrections which happen into stock prices, and especially at a point when the cycle starts to turn around or at least starts to improve for the markets. That's where we believe that the risk reward would start to look a lot more attractive for these stocks. I would believe that if you've purchased at higher levels of 500, rather than waiting for the stock to come back to 500, the prudent strategy over here should be to try and average out further, try and bring your cost price lower to maybe say closer to 440, 430 mark. That's where I would believe that you would probably stand into a much more better chance of getting into break even as well as in profits, say over the next 6 months to 12 months.
Okay, so average your holding and buy more at the current price to bring your average price lower is the advice coming in from Kunal for RVNL. But well, on that note, we'll slip into a very short break and we'll be right back, where we'll be addressing all your queries on the other side.
Welcome back. You're tuned in to Buy Now, Sell Now, where we are taking all your queries and getting them answered by experts. You can start writing to us on the number that's flashing on top of your screen. Let's resume with all the queries then. Now, this one's by Ajit. He's writing from Oman. He says that he has 500 shares of Tata Tech. He's bought it at a price of 1,156 rupees, and he has 200 shares of NCC that he's bought it at 280 rupees per share. He wants to know the long-term view on this. So I'll come to you, Rupak. Also, he's asked for Ola Electric. He's bought it at a price of 67 rupees. So, view on Tata Tech, NCC, and Ola Electric.
So, I will start with the Tata Tech. The stock is trying to give a decisive move above its important moving average, and the stock needs to close above 685 to witness a significant rally towards the higher level. And till the time it is not closing above 685. The stock might not witness a meaningful rally. So we need to wait and watch for Tata Tech. And for NCC, the stock has given a move above its previous consolidation, and I think the sentiment might remain positive in the short term. The stock is looking good to reach towards 220 in the short term, and on the lower end, we need to place a stop loss below 195. And the third stock is
Ola Electric, Rupak. It's Tata Tech, NCC, and Ola Electric.
Yeah, Ola Electric. So I would wait before I could buy Ola Electric, because I think there is a resistance at 57. The stock needs to move beyond 57 decisively. Then only I would suggest to buy the stock. And in that case, the stock will have a support at 54. If one should plan buying the stock above 57, keeping a stop loss below 54. And on the upside, the stock might move towards 75.
Okay, so that's the take on all of those stocks coming in. Kunal, coming to you. Rupak earlier spoke about Polycab, but now this query is coming in for Havells, also a player of the same wires and cable segment that is fundamentally spooked right now. But other than that, on the charts, what does Havells look like? And yeah, this is our viewer, Mr. Subrata Mukherjee, who's writing to us. He wants to know the levels that you're spotting for Havells from a medium-term perspective.
See, I would believe that the entire space is quite okay, because I would believe that yes, in terms of the news flow, there's been some sudden bout of volatility which has come back. But I would believe that the entire space of cables and wires, etc., they would start to look attractive. The only concern which is there with stock like Havells is that the stock has been a huge underperformer in the last 6 to 8 months. Now compare this with the likes of say KEI or Polycab, which only in the last 1 or 2 months, I think these stocks have shown correction from, I think, December highs for themselves. But then as compared to Havells, a stock which made a high, I think around the 2000, 2100 mark, the stock has gone down to a correction of almost 30% towards 1300, 1350 kind of levels. So I believe that the underperformance is quite stark for Havells. That's the only catch. I believe it's better that if you can probably look at shifting towards other names, rather than just looking at Havells. Maybe Polycab or KE at current levels could be attractive.
All right, moving on from wires and cables to the auto pack. Then Rupak, this person wants to know, this is Shashi writing from Bengaluru, wants to know your view on Tata Motors. He's holding 100 units and he's bought it at a price of 960 rupees. So clearly, I mean, he's running into losses right now. He wants to know the long-term view. Should he be holding Tata Motors going ahead?
So Tata Motor has given a meaningful rally after moving above 21 EMA in last 6 months. So the stock looks good for further rally towards 750 and higher. And one should hold or buy the stock with a stop loss of 670 till the time stock is remaining above 670. The sentiment might remain positive, and on the higher end, 750 might be the next resistance. Above 750, the stock might move into 810 kind of zone.
Watch out for those levels on Tata Motors. Kunal, coming to you, our viewer Mr. Rishi Mirwani is writing to us. He's asking for your view on IDFC First Bank for the next 3 to 5 years. He's holding 10,000 shares of the company at an average price of 72. He's been accumulating at different levels over the last 2 years. What's the strategy going ahead? And IDFC First Bank at 56 right now, his average is 72. So what should he be doing now with his holding?
I think you should look to hold on to the stock first, and then in terms of the average buy price, again, my strategy would be that my advice would be that you can look at averaging out your holdings over here at closer to this 55, 56 levels where it's trading right now, and try and bring your cost prices, say, net towards 62, 63 mark for IDFC First Bank, because I would believe that once the cycle, because the bank Nifty cycle is managed to turn around, it would be just about a matter of time that even the underperforming names like IDFC First Bank, they would probably get a leg up pretty soon. So I think it's a matter of time. Since you are looking at this for the next three to 5 years, I would look at a potential target of even 100 to 150 for IDFC First Bank. So averaging it out and lowering your cost price could be a better strategy.
All right. Moving on then, let's move on to the next query. Now this query, they've not given their name, but they have 1,948 shares of Bajaj Housing Finance at a price of 168, and they're currently sitting at a loss of 92,000, and they are in no condition of taking loss or stop loss. It's 80% of their capital. Kunal, what should this person do? How much time will it take to recover?
So I think it will take some bit of more time for the stock to recover. The only good part is that in the last 1 month, 1.5 months from Jan end, there have been 2 bouts of major volumes for Bajaj Housing Finance, and those volume patterns have led to the stock to move up its base or a support from 100, 105 as a support. It's now moved towards 110, 115 mark for Bajaj Finance. So maybe another leg up for the stock, and we could be looking at 120, 125 as a fresh level of support for Bajaj Housing Finance. So it's a good stock, of course limited history for the stock price, but I would believe that you could hold on to the stock even at current levels, and once we see maybe one more level of confirmation of a strong volume up move, you may look at 120, 125 as a fresh base for the stock.
Okay, Kunal, the person who's written this query to us, his name is Toki Rimam. He's writing to us from Bihar. Kunal, while I understand that Bajaj Housing Finance may look good on the charts, is it worth having 80% of someone's capital in this stock?
Of course, that's something which is of course questionable, because more skewed you are towards one particular stock in your portfolio, then you are more dependent on that stock rather than the overall market recovering. I think that's the bigger question which you have to answer. But then it depends on the style of each investor, each trader. I would believe that if you're looking to build your portfolio, it's a very good time to look at more large cap names, try and build up more quality mid cap stocks. I think you would probably get one of the better advantages if you try and build your portfolios, and then automatically the concentration for Bajaj Housing Finance would drop down once you start expanding your portfolio towards other names.
All right, that's the view coming in on Bajaj Housing Finance. But Rupak, let me come to you then. This person is holding 200 shares of Hindalco, and they bought it at a price of 740 rupees. The current price is of course around 700 odd rupees. So wants to know, Bharat from Surat wants to know whether they should sell at a loss or hold it, and what should be the holding period to perhaps cut their losses.
So Hindalco has witnessed a significant rally of around 26% in the last few weeks. And I think there might be some consolidation going forward. And after that, the stock might move towards higher once again. So I think if it is a very short-term trading bait, he can wait with a stop loss of 698. So it's a 2-3 rupees stop loss on the spot front. Below 698, the stock might enter into consolidation. It might take some time to move back higher level. Or if he is holding for a longer term trade, he can hold with a stop loss of 674. So 674 would be the short term stop loss, and on the higher end, the stock might move towards 760 in the short term.
Okay, those are the levels to watch out for in Hindalco. Kunal, quickly coming to you, our viewer Vaishnavi is writing to us from Chennai. 7 months ago, she's got 30 shares of Mazagon Dock at 2,200 rupees per share. She's asking what's the next target level to watch out for?
3,000 plus.
Okay, 3,000 plus, looking good for Mazagon Docks. And Rupak, I will try and accommodate one last query on this show if we have the time. This viewer who's writing to us, Mr. Ignatius from Kolkata, he has 50 stocks of UPL at 656 rupees per share. He can afford to hold this stock for 6 months. He is asking what are the stop losses and target prices for this trade. UPL is the stock in question. What are you spotting on the charts?
The stop loss would be 600 and the target might be 770 in the short term.
Okay, so that's the take coming in on UPL. Let's go across, and next query is coming in from our viewer, Mr. Hitesh, who's writing to us. He's asking Which, Kunal, this question is for you. Which stock in the Adani group of companies would be a good investment right now? And he's asking if Adani Green is looking good for the long term.
See, volume-wise, Adani Green seems to have formed a major base at this 800 mark. But then you'll also have to factor in the beta of these stocks, because Adani Green at one point of time was almost at 3,000 plus levels, and it's now come back to almost 1/3 or more than that of the earlier stock prices. So that beta of the stock is something which you'll have to adjust, because when you buy into these kind of names, there is a zone where the volatility swings to 10, 15, 20% in a matter of few days. So your quantity has to be a bit more restricted when you are adjusting towards beta of the stock. But yeah, I think Adani Green at current levels, and maybe in terms of dips closer to 800, could be considered as good buy.
All right, with that, we have come to an end of this show. Kunal and Rupak, thank you so much for taking the time out and answering all those queries for us. Thank you so much. Well, with that, it's a wrap on this edition of Buy Now Sell Now. Snehi and I will take care. Thank you so much for tuning in. Don't go anywhere, because Market at Noon is coming up next.
If you like this video, then like, share and subscribe to ET Now.